our tax institution, that is the Kenya Revenue Authority, has come up with some tax proposals that are going to affect global tech giants that have their presence here in Kenya. So we're talking about Netflix, Microsoft, Uber, Google. Some of these tax proposals, as I'm going to show you, are also going to affect your pocket. So let's have a look at that. There's this type of tax that is known as the digital service tax. Actually, the name mutated. It's now significant economic presence tax. That's the actual name, but let me just use the digital service tax because it's more descriptive. This is a type of tax that companies that don't have their residency here in Kenya pay. And this tax targets any income that comes from a digital service. That is through the internet or through electronic means. That is an electronic network. One of the tax proposals that they've come up with is that they have increased the wider range of services that should start paying for this tax. By the way, this tax is currently 3%. It used to be 1.5%, but I'm going to show you how it works. It's very, very simple. Let's have a look at some of these services. One, we have downloadable digital content. Any content that you download over the internet that you have to pay for. This one includes ebooks, it includes films, and here we have examples of companies like Amazon Kindle when you buy their ebooks. So if Amazon is going to derive an income from Kenya, that is you are going to buy a book from Amazon Kindle, then Amazon has to pay this tax. The other one is subscription-based media. So we are talking about news, magazines, streaming, any type of subscription that you have to pay. Here we have companies like Netflix because you have to pay a subscription fee. We have Netflix, we have YouTube Premium. We have Spotify because you also pay for such a service. It's a streaming service, so it qualifies for this tax. We also have software programs like drivers, web filters, firewalls. Here we have companies like Microsoft, Adobe, Kaspersky that provide such services. So when they derive an income from Kenya, they have to pay this 3% tax on the sales, on the gross sales, that gross income that they make. The other one is electronic data management services. So here we have cloud computing, hosting, file sharing, and we have companies like Amazon Web Services, Google Cloud, Microsoft Azure. So this one is mainly going to it's mainly going to affect businesses here in Kenya that seek out for such services. So if you are a local web hosting company and you pay for such a service abroad, that company has to pay tax. That company has to pay tax, which will definitely affect you because if a company starts paying tax that it never used to pay, that's a cost on their end. So it trickles down to you if they transfer that cost. The other one, we have social media and digital advertising platforms. Here we have Facebook, we have Instagram, we have WhatsApp, you have TikTok, Google Ads. These are advertising, internet advertising. So these companies also have to pay this 3% tax. We have e-learning platforms. Here we're talking about Coursera, Udemy. We have digital marketplaces for services and goods. And this one includes transport because that's what they mentioned. Transport, travel, accommodation, e-commerce. And here you can definitely think about Uber. You can definitely think about Bolt. You can think about Airbnb because it fits the accommodation description. Amazon, if you're purchasing any item from Amazon. We also have online payment services like digital wallets, PayPal. So as you can see, they have widened the scope. The list is longer than this, but these are some of the services that include this digital service tax. So if it wasn't included then, at least now they've become more specific. It's now clear on which company has to pay this tax. Previously, it wasn't that clear. Now, that is the first proposal that they have. The second proposal is that these companies will have to require to register under a simplified tax registration. So KRA is going to come up, if this proposal goes through, they're going to come up with a platform where they can actually sign up for tax. So that means that they have to register for the Kenyan taxpayer PIN as a business that is non-resident. I forgot to mention, when we say non-resident, let me just give you a qualification of what it means to be a non-resident, because this type of tax does not apply to your company, assuming you're a Kenyan startup and you have your location here. This tax is specifically for a non-resident company, a company that doesn't have its presence here. So let me just define what residents mean. If your internet protocol, that is your IP address, is registered here in Kenya. If it's registered here in Kenya, you are a Kenyan. It's a company that has its residence here, so you don't have to pay this tax. If you get loans or you receive payments, that is credits and debits from a Kenyan finance institution. If you have it here in Kenya, then you're a resident, because even for you to qualify for this, you have to have registered here in Kenya. The other one, this one is interesting in that the international mobile phone country code is assigned to Kenya. So if it's 254, it's a Kenyan one. But if the international mobile phone country code is for another country, then the assumption is you are not a Kenyan resident. The company does not have its Kenyan resident here. So all these companies that don't have their residency here will have to register under a tax registration system here in Kenya. You can think about that being a new requirement that companies have to go the extra mile to register here, which is going to be a process. It might discourage some companies that want to set up their businesses here. Again, it depends. Now, the other one, although this one existed before, is that at least now they have clarified that how these companies are going to pay these taxes is going to be the income that is going to qualify to be taxed is going to be 10% of their gross income. And this 10% that qualifies to be taxed, we call it taxable income because it's the one that qualifies to be taxed, is going to be taxed at 30%. So assuming that, this is just a simple example, assuming that a company made a sale of 100 shillings, let me just use 100 shillings. So 10% of this is 10 shillings, 10% of 100. So 10 shillings out of this 100 shillings is the one that qualifies to be taxed. And the tax is 30% of these 10 shillings. So 10% of 30%, it's 3%. That's the shortest calculation. So out of these 100 shillings, you pay 3 shillings. Yes. Out of 100 shillings, the company has to pay 3 shillings. Like I said, this tax was introduced in 2020. And to be honest, Kenya is one of the top digital consumers and leaders here in Africa. So we are a digitally savvy nation. It makes sense why the government would target such services. So the taxation changed. The tax was introduced in 2020 and it used to be 1.5%. In 2024, by the end of 2024, in December 2024 to be specific, they came up with a new law, an amendment, and the 1.5% was increased to 3%. So it's actually more. If this company used to charge you 100 shillings, now they qualify, they are part of this bracket that is going to be taxed, they have to pay an extra 3 shillings on top of the 100 shillings. So a company can decide to transfer that 3 shillings to you such that if you are paying for the 100 shillings, the 3 shillings on top that they have to pay as tax can be transferred to you. So you as a consumer, you now have to start paying 103 shillings, although the calculation is not accurate. But let's just take that example. A company can decide to transfer that tax incidence to you by increasing the prices so that it accommodates the tax that they are paying. If that is true, then who is actually paying the tax? Is it the company or is it you? The other downside is that it might discourage companies from setting up their premises here in Kenya. I would not care much about global companies that already have their name, that have already built their name, like Microsoft, Netflix, because they already have a market here in Kenya. So the easiest route will just to increase the price, but not leave the Kenyan market per se. They might find a way to adjust that. But for businesses that are starting up or they are targeting the Kenyan market, when they look at some of the rules that exist, if this makes it hard for them to set up their, or rather to do their business here in Kenya, they might decide to go to another country. But again, that is subject to you really analyzing how the consumer behaves. Because if you have a market here in Kenya and they don't mind paying that extra cost that you're going to transfer, then it's still fine. But it is an element that has to be looked at. And also just the notion that we don't have stability in terms of the policies that we put in place. We are not stable. We almost, or rather, we change our tax regimes every single time. That's an exaggeration, but you get the point, that they are not stable. We can't go 5 years without changing a tax element. We cannot go 5 years without introducing a new tax or coming up with a new law, because it's now a cost on these companies to comply. For example, some of these companies that have their bases here in Kenya, now that, assuming that these tax proposals will go through, they have to hire tax professionals to look into this matter so that they are compliant. You see, that's an additional cost, that's an additional headache. So that might be a point of concern. But the advantage, the good side to this is that the government can collect more revenue. We are a digitally savvy nation, so why should these companies not pay tax? Again, the government will now have more taxes, more revenue to collect, to spend on its citizens. Now, the real question is, will our taxes be spent in the right way? Now, that's another discussion. What do you think of this move, of some of these tax proposals? I'd love to know your thoughts in the comments.